Hello everybody, this is Eddie Ghabour. I'm co-owner of Key Advisors Group, and today I wanted to talk to you about a very important week we have this week, which is Fed Week, okay? The Fed always gets scrutinized, and every word that they say is listened to very closely and dissected, and then the market has to try to interpret what that means and what that means for their money. So as we go into this week and we anticipate the Fed finally admitting that inflation is not transitory, that we're going to potentially see, in our opinion, maybe a negative reaction from a market perspective if they talk about increasing their plans for tapering. We don't anticipate them talking about raising interest rates. I think they're going to continue to kick the can down the road there. Time will tell as we go into next year if that is the case or not. However, one thing that is very important to understand is if they do not admit that inflation is a problem and that it's not transitory, we think that could cause a bigger problem in the sense that the Fed will lose all credibility, because every metric you look at, whether it's housing, whether it's food, whether it's gas, whether it's natural gas, oil, no matter what commodity you look at, it has been almost a straight line upwards, and that is why we are now starting to see some real pressure to the consumer from an inflationary perspective. Couple all the increases in commodities, you also have this supply chain disruption that is becoming to materialize to the point now where I'm hearing story after story where someone goes to the store and they see a lot of empty shelves. That's inflationary. And the other thing too that's inflationary is, we're going to have jobs data that comes out on Friday. We anticipate the labor market to pick up steam. But the one thing is the labor costs. The labor costs continue to go up, and that's the most inflationary thing for any business, because labor cost is the highest cost that a business, or highest expense I should say, that a business has when they're operating. So from an inflationary perspective, in our opinion, there is no question that inflation is going to start to become a headwind versus a tailwind for GDP. It probably won't really start to show any material slowdown till next year. But our point is the Fed is going to have to lay out their game plan for tapering. And look, will it spook the markets? I would expect it to. The fact that they would admit that they're going to have to taper faster than originally anticipated. But we believe in the fourth quarter that any type of sell-off we would get from the Fed's rhetoric on Wednesday is simply an opportunity for those that have the risk tolerance to buy that dip. Okay, because at the end of the day, from a market perspective, we're still very, very bullish for the fourth quarter. We're not worried about the market until we get to the first half of next year. And so if we do get a gift, I will call it, when Mr. Powell speaks, if the market sells off, we want to make sure we take advantage of that. Again, for the right investor, with the right risk tolerance, is using a disciplined, risk-managed approach, okay? But make no mistake, this is a big deal, because this is going to set the table for the rest of this year in regards to what the market prices in from a monetary policy perspective. We're going to have one of two cases. We're going to have an extremely dovish Fed that just wants to continue to ignore inflation. Again, I think if they do that, that'll be more detrimental because of the loss of credibility. Or we're going to have a Fed that finally comes out and says we're going to start tapering in November, and we're going to slowly increase that tapering as much as the market can handle. So they're going to try to dance around the rhetoric and how they position this to try to not disrupt markets too bad. But again, as an investor, you've had a hell of a run this year. Certainly the last month has been wonderful. So I would go into the Fed meeting a little bit more cautious and looking for an opportunity short term to maybe trade a sell-off by the Fed. Because at the end of the day, when they're going to taper, it's still going to be not nearly as tightening as you would normally expect in such a hot inflationary environment. I mean, it's been over 40 years since we have seen the rate of inflation increase to the rate that it has this year. But again, I think we're in this loose monetary policy world for a while, and then the Fed has put themselves in a tight spot. So I'm rooting for them to talk about tapering and accelerating tapering going into next year, because I firmly believe that the longer they delay the tightening process, the worse it's going to be for consumers and the worse it's going to be for inflation. And those, in our opinion, are the most critical aspects of getting our economy where it needs to be with some consistency. Because again, if they don't, then we're going to see inflationary numbers that blows our mind much higher than where we are now. So Watch what the Fed says on Wednesday very closely. I know we will, but again, don't make any knee-jerk reactions from a one-day event. Take a step back, look at your portfolio, assess the risk you're taking with your goals for you and your family, and let that dictate the decisions that you make versus the Fed. That's all I got for today. Have a great week, and we'll see what happens Wednesday.